Hi, this is Seth David from the world famous Nerd Enterprises Incorporated, bringing to you another special screencast. This time we're talking about accounting for Groupon sales. And there are several elements to this that I want to go over in today's screencast. In the first place, we have the initial sale. What happens? We go out there, we sell the Groupons, Groupon collects the proceeds, Groupon takes their fee, they deduct that fee from the proceeds and send us a check for the difference. This is non-taxable revenue. I've sold no product. All I've done is I've sold customers or potential customers a benefit that they can use in the future, which is that they can come in and redeem that Groupon in order to get a discount on their purchase. So we have to show that sale, we have to deduct the fee. But there's no taxes to be paid on this portion because we've just sold a benefit. I haven't sold any tangible goods. Next, we have the redemption. The redemption is part of the final sale transaction. It will be tempting to set this up as a payment method. I'm going to explain why that won't work in this case. And finally, we have to deal with sales tax. I'm going to show you two ways to do this. Depending on your state and your state's rules for sales tax, you'll have to figure out which one is going to work for you. And what I strongly recommend is that you get in touch with your state's sales tax department, whomever that is. In California, it's the State Board of Equalization. It might be your Department of Revenue, but you can call them. I know the State Board of Equalization is very helpful. You can look up their number and call them and ask them questions, explain the sale transaction to them, and they'll tell you what the rules are. So let's take a look and see what this looks like in QuickBooks. I'll show you the two different ways of doing it in QuickBooks as far as the sales tax is concerned, and then you can decide which method is going to work for you depending on which state you are in. So here we are in the QuickBooks file for Accounting for Groupons LLC. And I'm going to show you how I've set this up. The key, of course, is in the items and how you set those up. The first thing to set up is the Groupon sales. This is to account for the initial sale, the future benefit that we're selling, so that this is a non-taxable sale and it should go to an income account, so we show Groupon sales. Now, the way I set this up on the chart of accounts, just so you can see it, is over here I actually created an account called Groupon sales. Now, you may or may not want to do this. I would do it this way because I would like to see. The argument against doing it this way is you're only going to do a Groupon once in every little while because there's a long waiting list, of course, at this point to have your business featured. So it may be something you only use once in a year, if even that much, maybe only one time ever. Whatever the case is, I would set it up like this because I would want to see this tracked separately. It certainly wouldn't be merchandise sales. So I would have to set up some kind of an income account to capture this in order to account for it properly. Then we have the Groupon fee item, which needs to be set up, and that goes to an expense account, or I think I set this up as cost of goods sold. We can edit the item real quick and see. Yes, I did set up a cost of goods sold account called Groupon fees. This way I can show the gross sale and show the fees that they keep. So that this way I can set up the transaction to arrive at the net proceeds that Groupon sends to me. Finally, we've got the Groupon redemption. And this is the whole key to how this works, because in the final sale, when I'm actually selling goods to somebody and they redeem their Groupon, this is what I'm going to need. And it's set up as a discount, not as a payment method. If I set it up as a payment method, QuickBooks is going to be looking for that amount to be deposited into a bank account. And obviously, that's not going to happen here. So we have to set it up as a discount. And you're going to see how that works in just a second. So let's pull up a sales receipt here. And initially, the customer's Groupon, that's who made the sale for us. That's who we're getting our proceeds from. And they're going to send us a check for the difference. I would record the total Groupon sales here. And let's say it's a $40 Groupon for $20. And let's say we've sold 300 of them at $20 a piece, is a gross sale proceed amount of $6,000. Now, keep in mind when you actually do this with Groupon, it might be broken up into several pieces, but ultimately you want to make sure you track the quantity sold at the rate you sold them at. And then we have the Groupon fee, which is going to be, I would put this in as minus 300 at $10, because Groupon, from what I understand, is going to take about 50% of the proceeds as their fee. And they also will charge you the credit card fees for people who pay by credit card. That's a whole other dynamic. And I read something on the internet this week that somebody actually negotiated with them and said no way, that they weren't going to pay that. That Groupon should eat that. So everything's negotiable. Make sure when you set this up with Groupon that you tell them you don't want to pay the credit card fees. You shouldn't have to. You have no control over how these customers pay, whether they pay for it by check or credit card. So I would tell Groupon, nope, sorry, not going to do it. They may or may not go along with it. But this is how you would record the initial sale. You've got a quantity of 300 at $20 a piece for a gross sale proceeds of $6,000. 300 of those are being paid to, or $10 on those 300 is being paid to Groupon and their fees. That's a minus $3,000 there. So your net proceeds on the initial sale is $3,000, all non-taxable. So let's save this, save and close. Spell check doesn't know what Groupon is yet. I'm sure they'll be adding that into the dictionaries very soon. We check this off, bring in our sale proceeds of $3,000 to deposit into the bank, and we're done with that part. Now let's come in and make a sale. Always Right comes into the store, and we sell him some tangible goods. And let's say we're selling him one item that costs $40 and it's taxable. Then we have the Groupon redemption. Now, I'm a big believer in keeping it simple. So, and frankly, I believe that this is how most of your states are going to want you to record a sale like this, which is very simply, I record the gross sale at $40. I record the redemption as a non-taxable item. So I'm collecting sales tax on the full amount of the sale. Los Angeles County, State of California, sales tax 9.75%. So it would come to $390. Now, the person who put the question about this that led to this webcast on my Facebook wall mentioned that they didn't necessarily want to be collecting sales tax on anything they did, or remitting sales taxes on anything they didn't actually receive. So let's think about that for a minute, and let's break it down very simply. First of all, as I mentioned, I suggest strongly that you call your state sales tax department and find out what they feel is the proper accounting treatment for this. Then you should do this in accordance with that. Let's say, for argument's sake, that they agree, no, you don't have to collect sales tax on the whole sale. You only have to collect it based on what you would have actually received from the customer. Well, initially, we're going to say that that's $20 we received, so I'd have to do it. I'd have to break it up this way, because I still have to give the customer credit for the full $40 of redemption. But what I would do is I would say half of the redemption is taxable, half the redemption is non-taxable, because in theory I only received $20 each on these Groupons, right? So that way I would split it up 20 and 20. Now, it gets a little more complicated, though, because in reality I only got $10 for this, right? Because Groupon then kept their share. So the taxable portion, really, I want to reduce the taxable portion by $30 and then make the non-taxable $10. That way, I'm only collecting sales tax on the $10 that I received, or 9.75% of $10. Rounded, that comes to 98 cents. So this would be how you would do it if your intention is to strictly report sales taxes based on what you received. The net amount you received on the sale was $10, right? Because you gave them $20 off, and then you split that $20 that you did receive with Groupon 50-50. So you only got $10. And so these are your choices in terms of how to record it. Like I said, if it were me, I would want to keep it simple. And I have a feeling that the state tax authority in your local state, sales tax in California's State Board of Equalization, I have a feeling they're going to want us to do it according to this method. They're going to want us to get the taxes on the whole sale. And, I would keep it simple and do it so that at this point you'd say to Mr. Always Right that there's $3.90 due on this sale. And if they say, what do you mean? I have a $40 coupon. You say, that's right, we gave you the $40 off, but there's still sales taxes. This is a taxable item. And hopefully they understand that and don't give us too hard of a time about having to pay $3.90 on a $40 item. And that, my friends, is how I would record the Groupon sales. Save and close. We have to deposit the sales taxes that we received. That's what we're going to collect from Always Right. So we would record that deposit, and that way when I run my sales tax liability, I have the $3.90 in the bank that I have to now send in to the State Board of Equalization. Notice how this breaks down. Total sales were $3,000, but because I discounted on a non-taxable basis the $40, non-taxable sales come down to $29.60. I have taxable sales of $40. And I'm getting 9.75% of that, or $3.90. That, my friends, is how a Groupon becomes a sale. If you have any questions at all, email me, Seth@nerdenterprises.com. If you would like additional training on how to set this up for your business, give me a call at 866-945-8070. I would be only too happy to help you with this. Finally, If you would like to download this QuickBooks file for reference, you can go through and audit the items and see how everything got set up, and you can kind of go through. There's only these couple of sales receipts here. You can go through this and see how I've set this all up firsthand. You may do so in my Knowledge Center. The QuickBooks file is available for download for a low donation. Those donations, of course, help me to be able to spend the time providing you with all these free webcasts. So I appreciate it. Just go ahead and go to my Knowledge Center. The link will be posted wherever you see this webcast. You'll see a link somewhere below it, to the right of it, above it, to the left of it. Somewhere around you'll see a link that says nerdenterprises.com/knowledge/ some long thing that takes you to the page where you can download this. Pay for it. Just a small nominal donation. Visit me on the web at www.nerdenterprises.com. Email me, Seth@nerdenterprises.com. Call me, 866-945-8070. I hope you're having an absolutely fantastic day, and I do look forward to seeing you